Strategies for understanding stock market corrections. Here are the lessons to be learned from this blog. Lesson 1. Stock market corrections in the Philippines are 10% plus drops that reset overvalued prices. They're normal, not crashes, and signal a chance to rethink your game plan. Lesson 2. Economic woes, weak earnings, rate hikes, or global shocks trigger corrections. In the Philippines, watch inflation, and BSP moves to spot trouble brewing. Lesson 3. Corrections cut volatility, but open-door stocks realign. Bargains pop up. They test your nerve and reward those who stay cool under pressure. Lesson 4. Bargain hunting shines in corrections. Buy strong Philippine stocks cheap. Diversify and manage risk to turn short-term pain into long-term gain. Lesson 5. Long-term focus and smart strategies beat correction chaos. Track trends, limit losses, and hold steady to thrive in the PSE. Eyes wild ride. The inevitable dip. What's a correction? Buckle up, investors. The Philippine stock market's about to take a breather. Stock market corrections hit when the PSEI drops 10% or more from its peak, a natural reset after a hot streak. They're not crashes, just reality checks. In the Philippines, where global ties and local quirks collide, these dips spark jitters, but also opportunities. Think of them as the market's way of cooling off overheated prices. From economic hiccups to investor panic, corrections shake things up fast. Ever seen the PSEI slide after a wild rally? That's a correction at work, realigning stocks with their true worth. Don't sweat the short-term chaos. It's part of the game. Curious why these happen and how to ride them out? Let's dive into the triggers rocking Manila's trading floors and uncover the secrets to thriving through the storm in the chapters ahead. Triggers of turmoil. What sparks a correction? Why does the Philippine stock market hit the brakes? Corrections don't just pop up, they're sparked by big forces. Economic red flags, like sluggish GDP growth, spiking inflation, or job losses signal trouble. Souring investor vibes. When the Bangko Sentral ng Pilipinas hikes rates to tame prices, borrowing gets pricier, and stocks feel the pinch. Corporate flops hurt too. Think a Jollibee earnings miss, or a BDO scandal dragging the PSEI down. Global shocks, like US rate hikes or South China Sea tensions, can yank funds out of Manila fast. Then there's the wild card psychology. Fearful herd selling turns a dip into a dive. In the Philippines, where news travels quick, a single headline can ignite panic. Want to know what's brewing? Let's unpack how these triggers shake the market and set the stage for your next move. The ripple effect. How corrections hit hard. When a correction strikes the Philippine stock market, it's more than just numbers, it's a wake-up call. Prices drop, portfolios shrink, and nerves fray. But here's the twist. It's not all doom. Corrections reset overblown stocks like an SM Investments hype bubble back to reality, keeping bubbles at bay. They're bargain season too. Savvy investors snag blue chip steals like Ayala Land on the cheap. Risk gets real, pushing you to rethink diversification. Don't let one sector tank you. Emotionally, it's a gut check. Panic sellers lose. Cool heads win. In the Philippines, where volatility's a fact of life, corrections test your grit. Ever wondered why some thrive while others dive? It's about seeing the reset as a chance, not a curse. Stick around as we explore the silver lining and strategies to conquer these dips next. Opportunity knocks turning dips into wins. Corrections in the Philippine stock market aren't just stumbles, they're gold mines. When the PSEI dips, quality stocks like Globe Telecom or San Miguel hit discount racks. It's bargain hunting time. Grab shares with solid fundamentals. Think strong earnings. Bat balance sheets at prices that scream future gains. In Manila, a real estate giant might drop 10%, but its long-term story stays rock solid. Dividend fans rejoice. 2 higher yields await in the chaos. The catch? You've got to spot the gems amid the gloom. Corrections also screen diversify. Spread bets across sectors: banking, utilities, retail to dodge big hits. Risk management's your shield. Stop loss orders, cap losses, keeping cash safe. In the Philippines, where peso swings and typhoons spice things up, this is your shot to buy low, win big. Ready to flip the script? Let's master the playbook next. Riding it out strategies for resilience. Facing a correction in the Philippine stock market? Don't flinch, fight smart. Keep your eyes on the long game fundamentals, not daily dips. Rule. Diversify like a pro. Mix stocks, bonds, and sectors to soften blows. Opportunistic? Scoop up PSEI champs like PLDT at fire sale prices. Patience pays off when the rebound hits. Risk-proof your moves, stop losses, and smart sizing guard your cash. Stay sharp track. BSP moves. Earnings buzz and market mood swings to guess what's next. In the Philippines, where corrections can sting, discipline beats panic. Think of 2020. The PSEI tanked, then soared. Those who held tight won. Corrections aren't the end, they're resets for sharper markets and richer returns. Master this, and you'll dance through Manila's market madness with confidence. Ready to turn volatility into victory? Let's wrap it up with lessons to live by.